Alright, guys, let me know if I am audible or not. If I'm audible, let me know in the chat. If my voice is clear, please let me know in the chat. Hopefully, there's no disturbance in the background. Alright, we'll wait for more people to join in, then we will start with the doubts. Pretty volatile market. Sorry. Alright, no disturbance. You can put in your questions in the chat box. And make sure that you like the stream as well before you join in. I mean, after you join in. Market looking good for consolidation till the elections. Market is already consolidating. I'm not sure what that means. But don't make any views on a specific timeline, alright? Banknifty is trading in a solid range. So it's a very big range, obviously it's like 2500 points, but this is what we have right now. So don't set any time for this. It can even move before the election. Election, I don't think. Obviously, election has some value, but I don't think you should use it as a guiding tool for what the market is going to do. Give me 1 second. Vector food. Yeah, I was expecting this stock to show up. Hopefully, you're not holding Vector's food. Just a second. But Maharashtra Seamless at 1005. 1005. This is an extended stock. Why are you buying this? 1005 is far. This is the demand. It's around 930, 940. This is too far up. See, you can get away with these things when the market is going up. So let's take an example. Let's take the stock. So you can get away with buying here when the market is going up because it's going to react from the demand. All right. You can get away with buying at these places, but as soon as there is 1 day of correction, everything like this will get exposed. All right. So you can get away with buying this stock, maybe let's say on this breakout, maybe somewhere higher here. But as soon as there's 1 day of correction, things can get exposed. All right. Now, obviously, these are moves with earnings, stocks which are showing, which are declaring the results. But this is what happens. All right. See, you can get away with buying here in the past, but this time it just broke everything, and these things will add up. So let's say the market is not that good for some time. So let's say let's take January. All right, January was not exactly the best month. Because why? Because we're going up in the early part of January, but this was also slow. If you see, there were a lot of red days here, which means that the market, even though it's gapping up, it is not continuing on the upside. All right. So all these red days, they show you that they're selling. Then it was down 3% here. All right, 3.5%. It was down on this day. It went back up. That is a different story. Again, we went to this supply, and again we fell. So what happens when there is a cluster of days like this in a very short period of time? What happens is, um, let's say something falls on these 3 days. All right, on these 3 days, something in the market is, let's say, falling, some stock. So let's say this is the EMA of the stock, and on this day breaks below and stays below. Now it fails to go up on these up move days, even though the up move is not that much. Let's say the stock fails to go up. Now when this thing will happen, when this will happen, the market will create an equal low. So this low in these areas and this low in the market is at the same spot. There is no um, nothing bad has happened in the index. But this stock, this can simply continue to downtrend. All right. Now again, what happens? We get 2 days of a rally. So let's say we go up again. Now again, there is a big down day. Again, this stock can fall big. All right. So even though the market is sideways, stocks which are weaker, they will get separated from the market. All right. And then a lot of these stocks, this has happened in January a lot of times. So if I take a few examples, let's take any of this. Let's take a few examples. So this is obviously one example, but this is not that bad, all right, because it's not exactly falling. Vector food, we'll talk about it. See, so this is one of the examples, all right. So if you see every day in January when there was a big fall, it was struggling, and suddenly on earnings day it's down 10%. All right. Now, how much time will it take to recover? How much time will it take to be bullish again? No one knows. All right, you can never know. So you will have to basically watch the stock forever if you're holding it. Another example is, let's say, this one. All right, let's look at this example. See what happened in January. Broke down in January, tried to go up with the market, but again, market is falling. Now this stock is dropping again. So this is why exiting is so important, because times when the market just keeps going up, these are very limited. All right. If you're not exiting weaker stocks, and if the market, let's say, does this, these weaker stocks might start doing this, and then you will not get any exit ever. All right. You will need another bull market to get an exit in your stock. So it's not about just one day of bad price action which can harm your stock. If it keeps happening in a short period of time, in 1 month, if you get 4 days like this, half of the market will start downtrending, even if the index is not breaking down. If the index is breaking down, then forget about it. Obviously, everything will fall. But even in a bull market, when the index isn't breaking down, if a lot of fall is happening in a short period of time, it means half of the market is doing bad, the other half is doing really good. All right. So in these scenarios, when the market moves out of this base, if this half does not pick up, all right, if you still don't see that breakouts are working, then again you will see something like this, because this is continuously weaker. All right. This half might be doing good. So after some time, this half will also get extended. This will pull back, and this will also fall if it does not set up again. So again, you will see something like this. All right. A lot of breakouts have been failing in the previous week, and it will obviously lead to a day like this. Now, what do you do on a day like this? Just book your loss. You cannot do anything to be safe from it. All right. If you're trying to be safe from it, you will maybe miss out on something like this, and then at the end you will get something like this. All right. So so it's a trade-off. Just book out 2-3% loss, whatever you get on your portfolio, and move on with it. All right. Now, what is the benefit of exiting weaker stock? So let's take this example. Let's add the small cap index. So look at the stock. So the stock did not fall in this part. Obviously, it corrected with the market, but it was fairly good. Now it's breaking out. So if you had exited the stocks which were breaking down, so let's say which were breaking down below your demand zones, this stock held its zone, all right. But if you exited the stocks which were breaking down, you could have bought this stock, which was stronger back then, and now it's doing really well, all right. So chances like this can basically set you up for a win very quickly. So this is what happened in this as well. So this is a trade which I took, so I will talk about it. So if you see on this day right here, on this fall, this was a 3% down move in the middle of the day. It was down 3%. All right, and this stock wasn't down, so I bought it, and then it broke out immediately. So this kind of a win is very easy when the market is corrected and it's trying to go back up again. You can catch one or two of these, which will basically make up for the entire loss that you took. So if you're taking a 3% loss, and let's say in at one time you are buying, let's say, 10 stocks. So even if two of these stronger stocks that you buy move 20%, then that's basically 2 plus 2, which is 4%. All right. So you will make that loss up in just two nice moves. All right. So it's very important to cut out your losses on time. All right. You cannot survive if you keep holding and expecting the stock to just bounce back up. There will be a day where you will just end up seeing that your capital is stuck forever. All right. And many stocks are downtrending. It's not like stocks are not downtrending. I can show a lot of examples to you which are downtrending. If you ignore all these power stocks and infra stocks, half of the market is downtrending apart from that. So let's take an example which is a weaker stock. These oil and gas stocks have also done well recently. Let me find something. So today, if you see, all these stocks that are down, they are basically already up, right? So in this manner also you can be safe. So let's say you have bought a bunch of these stocks which were looking good, which were trending up, all right, and now these are extended. So when a day like this happens, these are the stocks which will get hit the most. Your portfolio, if you keep exiting these stocks and buying newer stocks which are still around the demand or whatever EMA, you might not get hit that bad. All right, there might be some stocks which will not fall at all. All right, so you see the ones that are already there, that are already gone up with the market, they will fall with the market more. All right, and you will see maximum stocks will only break down when the index also breaks below the EMA and turns bearish. All right, because index is the representation of the stocks. So when the index forms a top, maximum number of stocks will also form a top. All right, let's talk about Vector Food. So Vector Food, the exit was yesterday. First of all, don't trade a stock into earnings. All right. Uh, Many people bought this stock in my server around this part, somewhere around here, I think. Whatever it was, somewhere around 1190, 1180. Now it tried to break out above this cluster of supplies right here. This is the supply area right here. Tried to break out, but then the results came in. So where did we exit the stock? The exit was done right here, and that is it. So this is how the stock looked when we exited the stock. That is over. Now the stock is done. Now it can bounce back up. It can fall back down. Something like this could have also happened where it just went back up. But since it's falling, if the market falls, let's say this is today. So if the market falls on the day after this, then there is a risk that the stock will also drop. And that is what happened. Now it's down 10%. So cut out the losses quickly. Alright, if you don't do that, uh, it's very tough because why are you buying this stock here? Just because the chart looks good. That is the only reason. So if suddenly out of nowhere the chart starts to look bad, it's time to get out. Hopefully it's clear. Like the only reason that you used to buy the stock, that is gone. So there's nothing left now. You just exit the stock. If you're holding this still, you can still exit it. It's not that bad if you bought it somewhere here. It's not that bad. But look at the difference that it makes. 4% loss yesterday and 14% loss today. So don't hold these stocks. You might think, and I I understand why it's difficult to uh, cut out losses in stocks because they fall together. So it's like you won't be taking any loss here or here, and suddenly on one day you have to book four stocks, four losses of 6% each. All right, so that's about a 2% hit on your portfolio, 2-3% depending on on your position size, whatever it is. You have to book out four stocks. You have to book out losses in four stocks suddenly. So uh, that might hurt, all right, and that might prevent you from booking out losses on time. But don't do that. Even if you have to book out your entire portfolio on one day, you just exit it. All right, you can't be wasting your time. So, and even if you see the list of the stocks that have fallen, a lot of stocks are down 6%, 7%. So you see, even stocks like these, one thing which you will notice is the stocks that are down 7% below the EMA. So from the EMA, if it's down 7%, those stocks are very less if they were already trending up, right? So if you see the biggest falls, they have happened from the top, all right? A continuation move of 7% or higher is rare, but obviously it has happened here because this was an earnings stock, all right? I'm not sure if the earnings has, yeah, I think earnings is declared. So again, the continuation fall is earnings, but it was already below the EMA here, all right? So what that tells you is, and the index is down 3%, all right? Index was down 3%. So what that tells you is, unless the stock is already bearish, you will not lose out on 7% in a day from your cost. So if you're buying here, you see the biggest falls, they have happened when it's far from the EMA. So if you're buying near the EMA, looking at a base or whatever you're looking at, immediately a fall like this, very rare, all right, extremely rare. Anytime you see it goes below the EMA for the first time, it will try to form a base there. It will try to wait around some demand, and then maybe next day it goes. All right. So so immediately from the EMA, 10% fall is rare. You will always get a chance to exit once. All right. So this is one of them, but again, this is an earnings stock. So I mean, again, if you see the biggest drops, they have happened from the top. All right. So whatever drop you see, most of them are happening from the top. All right. So yeah. So just stick to the rules, buy around the EMA and don't buy extended stocks. You should be all right. The index is recovering. It's probably recovering above these zones, and this will happen again and again. Uh, just take a loss. Don't worry about it. All right. Mangalam Cement. A lot of questions about Mangalam Cement. Okay, this is not bad. This might go up. Not bad. But I would probably wait for the market to settle down a bit. All right. Not bad though. Mangalam Cement does not look bad at all. Yesterday the market fell from the upper side where we expect a breakout in the hourly chart. All right. So about the index. So on the hourly chart, you use today's supply, which is this one. So if you see on the 15-minute chart, this is the last supply which made this new low. So just use this one. All right. If you're talking about the bigger daily supply, it's right here. But if you wait till here, since it's already bullish on the daily chart, it will just be at the high again. All right. So yeah. So basically, the hourly supply, which is right here, you use the hourly EMA is also there. So as soon as it starts to trade above it, you will see stocks are also doing well. Some stronger stocks are probably still doing well. Let's see. So again, all these moves, if you see, all these are continuation moves or earning moves. Earnings. Earnings season will end by next week. So maybe we can start going up again next week. Let's see. Venus pipe is already gone. It's already way up, way too up. Venus pipe. Let's have a look at Nifty and Bank Nifty as well. So Nifty, if you see, there is no damage in Nifty at all. All right. Where is the last up move in Nifty? This is the last up move in Nifty. This was the supply that I talked about. I posted on my Instagram story. And this is your area of demand. All right. Below this is also an area of demand, and then there is this. So obviously we are not concerned about these. This is your area of demand, and it is holding pretty well today. All right. So Nifty is already back above the EMA. If you see Nifty futures as well, this is also holding this demand pretty well. So we can simply gap up and continue up here. That is very possible in Nifty. If you see what is going on in Bank Nifty is also holding this area of last demand. Even though it is below the EMA, it is not bullish right now. So this area of supply, there is some supply in this region as well. So this entire cluster of supply is basically the same thing, all right, same range. So we can continue down in Bank Nifty, but we'll have to see um, what happens around this supply in the coming days. If it rejects again, then we might continue to lower levels. But nothing is there in Bank Nifty right now. But Nifty is still bullish. All right, Nifty is quite bullish, and Nifty mid cap is also good. Nifty mid cap is also reacting well. This is a strong base, and small cap is also reacting pretty well. So indices are not bad. All right. When can we start taking new positions? You can start them as soon as it goes back above the EMA. Just a little bit of surety, nothing else. Otherwise, you can probably buy right now itself. But just to be sure for a little bit, you can wait for the EMA. All right. Which EMA? Oh, the 50 EMA. Only the 50 EMA. Nothing else. 50 EMA is good for short term. This is about 2 months of trading activity, so it's good enough for short term. And don't use the EMA if you're not aware of how we use it. All right. I don't use it as a hard line. It's just an area that tells me that the stock hasn't moved for that much time. So if the EMA is 100 period and the stock is trading around it, it means that for the past 100 days the stock hasn't moved much, all right, or maybe not at all. So for the past 100 days, if the stock is at the 100 EMA, it means the stock hasn't moved for 100 days. All right. So 50 EMA is 2 months. So if the stock is around the 50 EMA, it means for 2 months it hasn't moved much. If it's far, it means it has moved a lot in the past 2 months. So now it might not move more. All right. So cement stocks are also doing pretty good. So Ambuja cement is breaking out. All right. Okay, this is already moving. It's already in a trend. So cement stocks are doing pretty good. You can keep a watch on cement stocks. What EMA? The 50 EMA. Only the 50 EMA. That's it. That is what I use. When it sets up around the 50 EMA, I'll buy them. That's what I do. Please go and watch my other videos as well if you are new here. All right, Railtel is far up. It's too far up. See, stocks might stay far from the EMA and still break out. All right. I'm not saying that whatever is far from the EMA is automatically bad. But the point is that it might come down as well. If the market starts to fall, it might come down very sharply. All right. So I try to trade around the EMA where the base is big enough, so that if it starts moving, I can maybe hold it for a bigger move. Which stock are you? I'm not looking at any stock right now. Paras defense is not bad, but there is nothing here. Let it calm down a bit. These candles are too big. Alright, there's too much supply here. Aarti drugs. Again, this thing is okay. This is not bad, but it is extended. So if you see the demand zone for this stock is this one. Alright, this part. So if you're buying here, it's too extended. Alright. So don't buy here. Railtel is there is nothing in Railtel. It's too far up. If you are holding it, um, I have no opinion on it. I cannot say anything. All right, because it's beyond my setup. So it's too far up. Uh, the demand zone is this candle because this is the last move. So so it can simply just stay in this range for some time before moving up or down. All right. So this is the demand which made the last move. So maybe something like this. If you see, this is your demand which made this last move, and it stayed inside this range, and then it started to go up. All right. In this example, it started to break down. So anything can happen here. I don't know. There's no setup. NDTV and Adani, all Adani stocks. I think Adani stocks, they're already moving. Yeah. This is extended. This is already up. So this is already up. So nothing in Adani stocks. They're already gone. This is gone. So see, I can only give you an opinion about a stock if it's setting up as per my rules. All right. If it's already uptrending and it's already gone, there is no point looking at it. I don't. So the name of the stock does not even matter for me. It's just how much risk to reward is there, and just a numbers game. Honestly, it can be Adani, it can be whatever. If the risk to reward is there, it's good. If it's not there, then it's not good. Tata Tech, Tata Technologies. Again, this is downtrending. It is always downtrending. Um, this was the demand, but this demand did not do anything. This is the high point. So it's continuously downtrending. It will be downtrending until this level is broken. So it has clearly tested that level as well. So this is the sideways range before the fall. So this is your last supply. So if it has to go up, it will probably form a base around here. Similar thing happened in Geo Finance. Right? It happens in a lot of IPOs. It was downtrending, and this was the last supply. And this is where we bought it once. Then there was a big breakout later on. But this was the trade that we took, this move right here. So until it's starting to go up, there is no point looking at Tata Tech. Home First, all right. Home First is not bad. I think Home First is kind of decent. Yeah, this is quite strong. Not bad, not bad. Finolex cables. This is okay. This is opened up, all right. This is already opened up. So if you bought it, let's say if you bought it here, then it's good. But now it needs another range between these two zones. Hind copper. Hind copper again. It's extended. All right. So nothing here. This is your area of demand, which is 260, and this is supply 300. Big range. So nothing here. If it has to set up, it will set up inside this area. All right, delivery will also fall in if I remember. Um, Again, nothing here. The demand is here, so again, too much space here. Nothing in the stock. Uniparts, again, this is broken down. If you bought it, exit the stock and stop trading stocks which are about to declare the results. Okay, Adani's. Okay, let's see. Adani Energy Solution. Um, nah, can't buy this. It's probably still below the weekly EMA as well. Yeah. So until it starts uptrending on the weekly, I would not buy this. All right. Buy stocks in these phases. All right. Not here, not here, not here. Buy them above the weekly EMA. All right. All right. How to trail profits? You cannot. So see. Okay, let's talk about this. So if you try to trail your profit in a swing trade, what happens? See, stocks cannot move up a lot at once. Some stocks might, but overall, if you buy 10 stocks, maybe one of them might continue moving till 1x, 2x, 3x, right? What happens is, let's say there's a big breakout. Let's say this is a 20% breakout. Now, immediate demand after this breakout is basically your entry, which was the contraction, all right? So, if it starts to pull back, there is nothing to stop it here, all right? So, that is the first point. Let's say if it does stop here on some lower time frame demand and it goes up another 10%, now it's 30%. So now what is your stop loss? It's still below your price which you got at 20%. It's still below the swing. So don't book out on the highs at 30% and you wait for it to maybe set up and go back up again. What if the market starts to fall? Now you're back below 20%. And while all this happens, you are basically wasting a lot of time. All right, the stock is extended. It might stop moving. It might continue to move if it's a big bull run, but honestly, you will never know before it happens. So Now again, there is a strong supply as well, so this range will also take time. So when you're wasting time here, you could have simply booked that 20-25% and moved on to a setup which has not moved yet from the EMA again, which has a higher probability of a big move. All right. So in my opinion, if you're trading swings, uh, 20-25% is a very nice number to book out in most stocks. All right. Even if a stock moves more than that, you will not catch it consistently. All right. You are not catching something like this move, right? Even for this move, look at the time it has wasted here. It's 2 months, 2 entire months gone. All right. And that too, this was a lucky spike. All right. No, nobody knows that it will spike like this. All right. So the more you wait, you're just leaving the stock to basically luck. See, let's say you bought here and you not and did not exit here. So where is the last demand on this stock? The last demand on the stock is this one. All right. So look at the time you waste. It's 3 months gone, and you have given away half your profit as well. So half of this is gone. Half of this entire move is gone here by the time you're exiting, and you have wasted 3 months. So just exit above 25%, 20-25%, and move on to a new stock. All right. No point holding stocks. Latent view. All right. Goodbye at 480. 480. 480 is high. 480 is here. Maybe latent view. See, this test is not there. All right. So not a good buy for me. Not a good buy. All right. Lokesh machines. Let's check this one out. Again, this is also extended. So if you see the demand is actually broken, but still you want to buy around this price. This is too far up. All right, so we will stop here. Hopefully, you guys learned something new, and we will meet again on next Friday. All right, have a good weekend, have fun.